Thanks for joining us again. Today we unpack advertising costs and master's fees. Let's start with advertising. Under South African law, an executor cannot simply start paying beneficiaries and winding up an estate quietly in the background. The law requires transparency and an opportunity for anyone with a valid claim to step forward. That's why the executor must publish two separate notices. The first notice is a notice to creditors, inviting all creditors to submit their claims against their estate within a minimum of 30 days. The second notice is a notice of liquidation of the liquidation and distribution account, informing the public that the account is open for inspection, usually for a period of 21 days, at the master's office and the local magistrate's court. By law, both notices must appear twice, once in a local newspaper circulating in the area where the deceased lived, and once in the government gazette. Each insertion carries its own fee, and while amounts vary depending on publication rates, you can generally expect to spend between 1,000 and 2,500 rand in total for both rounds. Next up is the master's office fee, a statutory fee payable to the master of the High Court before the estate can be finalized. This is not a flat amount. It's calculated on a sliding scale based on the total gross value of the estate, ranging anywhere from 600 Rand to 7,000 Rand. The higher the estate value, the higher the fee. And the list doesn't end there. Additional hidden costs often creep in, such as bank charges, which are levied on the estate late banking account, courier or postal fees for sending documents to the master's office, beneficiaries, and other stakeholders. Also, obtaining certified copies and other document administration expenses. Individually, these might seem like small amounts, but together they add up pretty quickly. Here's the important part. These costs must be settled before a single cent can be distributed to beneficiaries. If the estate does not have enough cash on hand to cover them, the executor may be forced to realize assets, selling property, investments, or valuables just to pay expenses. This can shrink the value of what your loved ones ultimately inherit. Here is a tip. When doing your estate planning, always factor in liquidity. That is, whether your estate will have enough cash available to settle debts, fees, and costs without having to sell off prized assets. In our next segment, we'll dive into another key estate cost, the role taxes play in the winding up process, and why they can be one of the largest expenses of all.